You're tuned in to Agriculture Today, and we start our Friday show as we normally do with a grain market update. And as always, we're joined by Key State grain economist Dan O'Brien. Dan, thanks for joining us once again.
Thank you, Shelby.
So, Dan, last Friday we had two reports come out that contributed to the volatility in the grain markets. And so, what does this mean for the futures?
Well, the grain stocks report came out and showed lower stocks than had been expected for a number of major commodities. So that in itself, if we only had that alone, that would have been a bullish factor. But then the acreage report that came out again on June the 30th had sharply more acres of corn planted than had been expected, sharply lower, way sharply, if that's the right university lingo to use, a lot lower acreage of soybeans. So the markets have been reacting in a big way to all that. The futures, of course, they responded. We ended up on yesterday's closes on July the 6th. We had September, which is now the effective lead contract for corn, closed at $4.99. It has certainly been higher in the past. When you look at that $4.99, we had been trading as up over $6 within the not too distant future, but had fallen to about $4.80 or so. So the $4.99, or essentially just under $5, is for those that had seen that free fall. It's almost a relief, that's not falling more. So that's where that stood at. For soybeans, August, the effective lead contract on the futures closed at 14.48.5, and for soybeans, that contract had traded as low as basically just under $12, and had traded here in the last few days up to above $15. So again, more acres for corn, and rainfall and fewer acres for soybeans, even with rainfall, has brought us to the place where corn's been strong. Corn's been very weak price-wise, relatively speaking, stabilizing some. Soybeans very, very strong. So that fear is in the market. On the wheat side, wasn't a lot of major change that happened in that particular report, but so you've seen wheat close yesterday at 8.43 3/4. If anything, there was some shortness in soft red winter wheat, in hard red spring wheat numbers, and the markets for wheat have generally found support. Again, the 8.43 3/4 closed yesterday, and we had within the last about 2 months, we traded as low as about 7.30. About a week or so ago, about 7.90 or so, just a little bit below that, and now we're at 8.45 or so. So again, 55 cents up from where we had been. And if we're not chartists or chart watchers, technical traders here, and at Kansas State University, but if you look at where that price is at, you look at this big range we've been swinging back and forth in for wheat, and now we're basically just right in the middle of it, which means that we're trying to figure out what to do. So the futures have certainly been volatile. The volatility indices that we follow, almost as high as we had gotten back right in the middle of the Ukraine-Russia, the start of those conflicts. So we're just quite volatile right now. And I think if we have time at the end to talk about where markets might go, it looks like a story that's probably going to continue until we have some surety for corn and for soybeans, and for what's happening internationally for wheat, and that would come into the market.
And another portion of the grain market that we often talk about is cash. And so, what are we seeing there?
Just a lot of volatility and great changes. I know for those of us that for those of you that can, for folks that can look at our price sheets, again, we follow the Colby area, Saline area, Topeka, Garden City, Hutchinson, Columbus, and you just see some things that look normal and some things that look abnormal. And you can certainly see with wheat harvest coming on that there are some locations, the Salina area, the Hutchinson area in particular, that have strong wheat prices, almost about basically $8.95, just under $9. And you've got other places that are much weaker, a dollar or so lower. So almost no forward bids beyond just the current cash, which is what you tend to have during a harvest time frame. So just a lot of variability around the wheat prices. And I would say for corn, it's interesting. The strongest bid over time normally for corn has been in Southwest Kansas around the Garden City area, and that still is a pretty strong price. Here on yesterday's close, saw the highest price of about $5.99, just under $6. Great price. Yet you have bids at Salina, at Hutchinson, at Columbus that are all higher than that. So, the variable impacts of moisture conditions and growing conditions, local demand at these areas is really standing out. And I don't want to belittle the Garden City area. They have the highest forward price bid of $5.42, and the next highest one's $5.07. So still forward price is strong, but there's supply demand balances here right now in that area are less than that. And the same type of great volatility for grain sorghum. You got the two strongest bids in the Hutchinson and Columbus areas for grain sorghum, which is something to watch, I guess. And for soybeans, just an amazing variability also there. I guess the strongest bid that at least I could see around the state actually was in the Columbus area, down the southeast corner. We have ethanol plants coming in, biodiesel plants being built in those areas, demand coming in and affecting all that. So $14.71 for a price there. The next highest price at Hutchinson, Topeka area, $14.64, Hutchinson $14.48, less elsewhere. So we talk about all of that and look at the trends in different for these commodities, for the cash prices and their local basis. It really stands out. I just would say that when you look at corn basis levels, as we rolled from having the July contract as what we were basing local cash prices off of into the September contract, we really saw basis in some of these areas of the state really change, really jump around to the higher side, in particular in that Hutchinson area. So just a lot to watch right now.
And something we haven't really talked about recently as we do our grain market updates, but is important, local basis.
Yeah, and just as we've talked about, I think local basis really stands out when you look at wheat, and you'd expect, gracious, we're in the middle of harvest, and in a traditional time frame, you'd see a lot of weakness in wheat basis. But as we look at these same locations, actually the only place that, whereas I just talking about how the Hutchinson corn basis really spiked higher, at least at one or two of the locations we were watching, the Hutchinson wheat basis really spiked lower. So go figure, just a lot of variability. But in most other areas of the state, basis pretty much sideways, a little bit. Well, I guess in the two western parts of Kansas, Colby area, Garden City Wright area, that part sideways to lower or a little bit weaker, sideways to Topeka, Salina area, sideways to higher. Location we've been watching, Columbus area, sideways a little bit lower. So no doubt, our farmer colleagues, our audience that we serve and are talking to, they watch these local basis situations. And so if they're taking, say for wheat, they're taking wheat out of the field and wondering where to take it to, well, they're looking at each of these local elevator bids, and the elevators are making their offers based on what space they have available, or do they have trains coming in that can take this out or not. A lot of times when you see a real spike higher in basis, somebody's filling a train. or they have or they're trying to fill up their storage. So I guess it's the time of real location to location volatility for wheat basis, particularly when some places have supplies and are filling up, and others are already filled up or just don't want to take any more.
And something we've talked about a lot these past few times is the eastern and central part of the Corn Belt, those three I states, and what their weather has been like. And so, how's that affecting markets now?
The rainfall that came about within the last week that affected Kansas also came and affected parts of again, the three I states that are so important to U.S. Corn and soybean production. Iowa, Illinois, and Indiana. And so fair question. Well, when that rain came, has it changed the situation? When you look at the amount of soil moisture in those states, still showing, even with the rains that just came, still showing pretty dry in through there. So if you look at different drought monitoring tools that we have, and it looks like a major swath of moisture did come through along the Iowa, Missouri border, on into central Illinois, on into southern Indiana, and down Kentucky and parts of Ohio. But other parts, again, northern Iowa, southern Minnesota, now parts of Canada and North Dakota. In fact, that's one of the things supporting the wheat markets, real dryness up there in the spring wheat areas. Anyway, point being that, so we've had swaths of moisture. We've had some wind damage come through. A Direcco, and as our friend Chip Redmond would talk about, up in states not too far from us. So I guess, Shelby, I think the moisture that's come has certainly been helpful. The markets have responded to it. When you look at the moisture maps, though, soil profile hasn't been changed in some of those areas that much. It sure looks like we're very likely to be affected by temperatures and rainfall or lack thereof still going on now through the rest of July and on into August, on into September, at least as long as until we start to get some of the in the field survey based USDA numbers that'll come out in that September crop report. So a lot of volatility. You and I were talking before we came on here. I think if there's one thing I would tell people is that if the rains do continue to come, we do have downside risk in these markets. It's probably not to 350 unless there's something beyond just agriculture and that's a problem. But something just as we've seen D's corn fall pretty readily down to $5. Does it go to 450? Does it go to 425? And soybeans, do they go to 12? Something along those lines. So we do have risk right now. In fact, we're living in it. We're living in it right now, and ag producers that are looking towards forward pricing moves, if they feel surety about what crops they have, they to look at some type of a price protection move would be interesting. Of course, if they do that, they're the first ones to say, yeah, I'll do that, but I better buy crop insurance too. So that's kind of how all that works together.
Dan, I appreciate you taking the time to join us and give us our grain market update for the week.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more for you ahead.